With a market capitalization of nearly $900 billion, Amazon is the fourth largest US public company in the world, trailing only Apple, Microsoft, and Alphabet. And for this reason, I'm sure it's on a lot of investors' minds. But it's on investors' minds for another reason as well. Since 2021, the stock has lost more than half of its value. And now trading at about $86 per share, Amazon trades below its high of $102 per share way back in 2018, which when you think about all of the growth that the company has experienced over the last 5 years, that's really extraordinary. Therefore, with a drop like this, I'm sure that investors are wondering more than ever, will Amazon stock go back up? And if so, when? To answer that question, you need to understand that when it comes to Amazon stock, the market cares about one thing more than anything else. And that's what we're going to talk about in this video. Hi, my name is John Quast. Thank you for coming to my YouTube channel, Working Capital. I'm going to make a dogmatic statement here at the beginning. Profits drive stock performance over long time periods. However, profitability can be measured in a variety of ways. You can look at net income, operating cash flow.
There's pineapple shrimp, lemon shrimp.
Free cash flow, adjusted EBITDA.
That's about it.
And each one has its merits depending on the company that you're looking at and where it's at in its business life cycle and other things as well. When it comes to a company built like Amazon and at a stage in its life cycle like Amazon, I like to look at operating income. And I believe that the market does too, and I can prove it. So, here's my proof. On July 29th, 2021, Amazon reported financial results for the second quarter of 2021. In the year leading up to that report, it had operating income of $29.7 billion. On the day of that report, Amazon stock was trading at about $180 per share. Now, let's fast forward to the third quarter of 2022. On October 27th, Amazon reported Q3 results, and in the year leading up to that report, it had operating income of only $13 billion. In other words, Amazon's operating income peaked way back in the second quarter of 2021 and has fallen 56% since then. Not surprisingly, back in the second quarter of 2021 was about where Amazon's stock peaked as well and has since dropped 52%. So, operating income down 56%, Amazon stock down 52%, that is too strong of a correlation to be a coincidence in my opinion. And it proves my point that profits drive stock price over a long period of time. Okay, so if operating income is driving Amazon's stock price, what is driving Amazon's operating income? And the answer to that is very simple. Amazon Web Services, or Amazon AWS. This is the company's cloud computing platform. Businesses, both small and large, use the platform for many different things. We're not going to go into what they all are, but it's a very profitable business for Amazon. And historically, it has driven the operating income for the company. In fact, AWS accounted for 63%, 59%, and 74% of Amazon's total operating income in 2019, 20, and 21, respectively. Therefore, if AWS is the driver for Amazon's operating income overall, then it's only logical to assume that the operating income is down because there's some sort of problem with AWS. It would be logical to assume that, but nothing could be further from the truth. In reality, net sales for Amazon's AWS in the first 3 quarters of 2022 are up 32% from the same period of 2021. And the operating margin or the profit margin for this segment of the business has held steady at about 30%. Therefore, AWS is still growing and it's still just as profitable for the company as it's ever been. So the problem cannot be AWS. In reality, Amazon's e-commerce operations in North America are losing more money than they ever have. And there's several key things that are leading to this underperformance. First, you have inflation. With inflation, the cost of the products that Amazon sells on its website have gone up. And if you don't raise prices fast enough, then your profit margins get hit. Then you also have inflation with things like energy, and that affects a company like Amazon because it has a huge logistics network. Labor is another problem for Amazon's e-commerce operations. In the early days of the pandemic, many employees decided to take a leave of absence, not wanting to put themselves in danger of catching the virus. The problem was Amazon's business did not slow down, so it was forced to hire new employees to replace the ones who weren't coming into work. However, in time, those workers who had been on leave came back. and that caused Amazon's e-commerce operations to be less efficient than they used to be. And then more recently, there are some things that are really costing Amazon a lot of money, and it comes down to streaming video content. So for example, Lord of the Rings: Rings of Power, that cost about $1 billion to make, and it didn't bring in all that much more in subscribers to the Prime service. You have other big costs too, such as streaming for Thursday Night Football from the NFL. This is also costing about $1 billion a year just to do. Add all of this up together, and e-commerce operations for Amazon are extremely unprofitable right now, and it's just too much for AWS to overcome on its own. Okay, so if a drop in operating income is why Amazon stock has fallen by more than half, then the question is, can operating income rebound and send the stock price back up as well? The short answer is yes. Amazon is fixing its labor inefficiencies when it comes to e-commerce. I'm not celebrating anyone losing their job. However, Amazon did just announce some meaningful layoffs throughout the company to address some of these labor inefficiencies that it's been noticing now for several quarters. This will help boost operating income for the e-commerce operations. Then you also have the fact that inflation is slowing down. The prices of things aren't going up as fast as they once were. And in some cases, prices are even coming back down, as is the case with gas, for example. So right now, the national average for a gallon of gas has fallen to almost $3 a gallon. This will help Amazon's e-commerce operations as well. And not to mention, AWS is still the driver for operating income for Amazon, and there's still a lot of growth happening there. AWS has over $100 billion in backlog or remaining performance obligations that are under contract and will be recognized over the next 3.8 years on average. Add up the improvements to e-commerce and the ongoing growth of AWS, and Amazon's operating income does indeed look poised to rebound. My best guess would be in the second half of 2023, it all starts to come together. So if I'm saying that operating income won't rebound until the second half of the year, does that mean that investors should wait before getting back into Amazon stock? Well, not necessarily. You see, the market looks ahead. And so as soon as investors are able to see that operating income is indeed improving, they can begin to project this before it actually happens. Therefore, it's possible that Amazon stock could actually rebound in anticipation of the rebound of operating income before it actually happens. No matter when it happens exactly, I feel like I can safely say that Amazon is lucky to have AWS right now. Otherwise, it wouldn't have any profits whatsoever. However, AWS was not the result of luck for the company, but rather it's a product of the genius of Jeff Bezos and how he constructed his company. And you can find out more about that in this video that I did on the topic right here. Anyways, thanks so much for watching. I really appreciate you coming to my video, and we'll see you in the next one.